Volatile markets, falling profits and uncertain regulatory environment. It's not been a smooth sailing for companies, which are witnessing a big drop in valuations. And this, unpredictably, has caught private equity firms completely off guard. Some of the big bracket PE firms have suffered huge losses from their India play. In fact, their going had never been tougher.
The investments between 2006, 7 and 8, two things. I do not believe that they have possibly generated the kind of returns that the investors expected. And two, I think they've used every opportunity to sort of monetize some of their investments. Whether it, as I said, it is by way of selling in the stock markets, even in the first quarter of this year, or it is by strategic sale.
Buyout specialists Bain Capital and TPG invested money in fast-growing kidswear company Lilliput in 2010. Now they are locked in litigation with the company's promoters after they suspected the company's books were cooked. British PE fund 3i led a $300 million investment into GVK's power business in 2010. The company's stock was trading at over 40 rupees a share at the time, but it has lost nearly 60% of its market value ever since. Singapore state-backed investor Temasek also led a similar investment into GMR's power business in early 2010. GMR's stock has also lost nearly 60% of its market value since the investment was made. And it's not just about falling valuations. The uncertainty over government policies is not making things easier either. The retrospective changes to the tax laws in the form of GAR is threatening to squeeze their margins further in the way of a capital gains tax.
It's important that investors have certainty in how they will be treated on tax, particularly investments that have already come in based on a certain government regime on taxation and a certain structure of those investments. I think it's important that we ensure that those get treated the same way that, in a sense, was implied when they made those investments.
PE investors like Carlyle and Citi have used recent market spurts to square off investments in companies like Kotak Mahindra Bank and HDFC. But with valuations hovering at a hefty discount, other PE firms may not be just as lucky. Mohit Bhalla, ET Now, Mumbai.